In today's video, we'll be going over the datasets, the earnings, the SPY technical analysis, and some potential trade setups for the week of June 22nd, 2026. And with that said, let's go ahead and jump straight into the data. A lot of the data this week really isn't until Thursday or Friday. For example, Monday we really don't have anything going on. Tuesday we have a little bit with the ADP weekly and the S&P, PMI services, manufacturing, and composite. Really nothing too important for the market though. For Wednesday, we do have the quarter one current account. It is showing a downward trend in the forecast, which means that the exports and imports are, tapering down a little bit compared to pulling back up. Now, the big days this week are again Thursday and Friday. On Thursday, we have all the PCE data, which is the personal consumption expenditures. And then we also have the GDP. So very, very important data. The GDP data sets are always very, very crucial for the market. Same with the PCE data. So going to be a very busy day. All that comes out at 8:30 a.m. Now for Friday, not as big of a day, but we do have the Michigan inflation and consumer sentiment coming out at 10 a.m. That definitely can move the market, especially when the Fed has been hawkish. They've been saying that inflation's moving upward. So it'll be interesting to see what the Michigan data sets provide to us, whether they're giving us longer term inflation ratings or, shorter term. So I'll be interested in that. That should move the market a little bit depending on if it's hawkish or dovish. Hawkish being leaning towards higher inflation, dovish being basically a pause in the inflation or seeing, that pull down. So really, it's Thursday and Friday that are important this week. Now for the earnings, and I can't really show this very well because it's deciding not to load the images, but for the earnings, we really don't have anything special this week except for Micron, so that's going to be on Wednesday afternoon. So whatever happens with Micron, that will definitely carry over into Thursday's trading session, probably even Friday. So with the data being, very large on Thursday and Friday, this is going to be a very important few days. We can have Micron break out and then pull the market up, while some of this other data can pull the market down. Or we can have Micron, do not so well with its earnings, plus hawkish data on the Thursday and Friday, and that would pull the data or pull the market down quite a bit. Now, I did want to show the Fed CME, and this is for next FOMC in July, so July 29th. The odds of a rate hike have actually gone up quite substantially. So it's currently about a 38.5% chance of there being a hike in this next meeting. Now, for September, the odds are, you know, that hike being a lot higher than it says 51.5%. But the thing that you have to take into account as well is that they're also pricing in potentially a second hike during that point. So they're saying that we can have a hike in July's meeting and also in September's. Um, I don't think that's going to be the case. And, that's why this is at 51.5%. And now they're only saying that there's only basically a 24% chance of us being at the current interest rates. So the odds of a hike this year are looking higher and higher. We get to December, and the current rate is basically only expected to be about 9% chance. There's a 37% chance that we'll have two rate hikes, um, by this September meeting or by this December meeting. So the CME, the market, the treasury market, bond market is really starting to price in higher inflation, higher yields, and the very likely potential of, 1 to 2 hikes this year. Trading is a skill that can last for a lifetime. Join my Patreon for live classes, my personal market analysis, premium Discord access, and direct communication with me. Invest in yourself, become a more consistent trader, and build a better future for yourself and your family. Visit patreon.com/wooksy to join today. Thank you so much, and let's return back to the video. Now, jumping into the SPY technical analysis this week, we did have an interesting week last week. So there was a bit of selling the week before, saw some buying, had a bit of a selling day, and so far have somewhat recovered. Now, what's important about this is that I want you to see this green line, which is the daily 5 mile. That's, the 5-day moving average, excuse me. But the 5 mile has went from all the way to the 733, all the way back up to the 745.39 again. And with the close we had on Friday, uh, or on Thursday, excuse me, I forgot that we had a holiday. But on Thursday, we closed at the 746.74, which means that the 5 mile will be pulling upwards slightly higher. That means that the 5 mile technically is finally above the 20 mile. So that was one of those bullish signals that we talked about a couple weeks ago where the 5 mile pulling upward, we would expect it to cross the 10 mile and start to basically pull back towards where this 20 mile range is. That's going to be very, very important for the market, and that's actually a bullish signal. Now, the thing that is still fairly bearish is that our 10 mile is still below the 20 mile and still below the 5 mile. So we do still have basically a whole nother week of, pulling upward if we're going to be seeing the 5 mile and 10 mile pull above this 20 mile range. So that's the next main bull signal that I'm looking for to see if, the market's going to continue breaking out from here or if we're going to, kind of collapse upon this support and break down. One thing we do have to contend with is that the 50 mile is at this 727.82, which is currently where the lower Bollinger is. Now, do I think we're going to head to the lower Bollinger this week? Very likely not, unless we see some very, very, very bad data sets out of the data sets we talked about. Or if Micron just absolutely gets destroyed with their earnings, something like that. Something major would have to shift in the sentiment to really pull the market down that much. Now, we still have this conflict with Iran, which, yes, we've signed the MOU, the memorandum of whatever, whatever, which basically means that we're kind of in a ceasefire right now. However, we're seeing Lebanon and Israel picking up tensions. Even though they've agreed to a ceasefire, there's still a lot of tough talk coming out of the region. So this conflict can be picking back up very, very soon, as much as I don't want that to happen. And if that does happen, that can absolutely pull the market down. With the 50 mob being so close to us, that makes it a range where technically we should be testing that every 50 days. We're still a little bit far out compared to being that full 50-day mark, but it's getting fairly close, which means that that is starting to become a target we need to be aware of. Okay, so if we don't start, really, really pushing, then very likely we're going to see the 5 mod, the 10 mod, the 20 mod all start to collapse upon that range. And if we see that happen, then what comes next? It's this big, scary old 200 mile range. I do think we're a while away from that, but again, with some of the market conditions going on, that can absolutely be the case. Now, for the bullish case, again, we do have some good signals. We have the 5 mile crossing above the 10 mile and above the 20 mile. So if we can see a continuation of the buying to the upside, and I want to hide some of these drawings, but we are potentially creating a small cup here. And from that small cup, it would create this larger cup back up to the 758.46. And from that range, very likely build some bearish structure for continuing upward with the handle. But another thing we have to look at with the structure here is that potentially, even though it doesn't look like it, this absolutely can turn into a big head and shoulders. And not only that, we do have this inverse cup closed. And with that inverse cup closed, this can be a handle to continue pulling us downward. Okay. So we're in between some major structures here. What I'd really like to see for the bullish upside is a push back up to this basically 745.75. That would close that smaller cup that I just talked about. And from that range, then we can have some, fair understanding that very likely we'll pull down, create some bullish liquidity to the upside, and then really start pushing again, which that can absolutely happen within the next few sessions. So really just stay on your toes this week. We're kind of in between a lot of consolidation. Last week I talked about the 5 mah, 10 mah, and 20 mah all being pretty close to being on top of each other, showing a little differently just because we did have such a pull down the week prior. But with these levels being so close to each other, they can continue to consolidate. So we could see the market pull back down, 10 mah basically hold that level, 20 mah start pulling back down again, and then that could lead into some of that bearish structure. Now, with all that said, one of the big trades that I'm looking for this week, and this is a longer duration trade, but it is FXY. Now, the reason why I'm looking at FXY is because with the Bank of Japan having to raise their interest rates to the highest range since 1995, basically, that has pulled the yen down massively. Massively, massively, massively. In fact, the yen is pretty much at, all-time lows right now. Which means that if we're going to see the conflict end and truly, truly be ended, then what we can look for, and this marked from a while ago, but I did not take that position. What we can expect is that the Bank of Japan will want to sell positions and intervene into the yen. Okay. A yen intervention would cause the yen to rise pretty drastically. Now, each time we see these red squares, this has been when the Bank of Japan has intervened in the yen. The yellow has been when there's been an oil conflict. So we're kind of in this same position where we've had this oil conflict really pull us down. And let me go ahead and draw this. Where this oil conflict really pulls down. And from pulling down, very likely there's a ton of room to the upside for the yen. Now, the calls that I'm looking for are the September, I forgot what date it is, I want to say September 18th, the 58 straight calls, because that would just mean we would need to go from this 56, basically just $1.50 upward. And then anything above that is going to just be massive profit. So getting those calls in the money shouldn't be the most difficult thing in the world. So I really like this trade a lot. Now, this week as well, and I apologize for being out of breath. This week as well, though, I do want to hedge some of our oil positions. So we're going to be taking a look at Gush. We're going to be taking a look at some drip puts. We're going to be taking a look at BNO, which is Brent Oil Fund. I did want to take some USO calls, but they're very, 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 very pricey. Um, and basically we'd have to buy like far, far, far out of the money, like 180 strike, something like that, to even get remotely close to a hedged position compared to our 90 strike puts. So I'm not too interested in trying to take calls on USO. If anything, I want some cheap calls that are going to hedge the upside just in case we start getting that conflict changing direction. So the calls that I'm looking for are the Gush 34 calls for July 17th. No, it doesn't completely hedge for September, but July will cover, you know, basically a large majority of what's going to be going on with this conflict. Either we're going to pick back up and have the conflict start again, or it's really going to taper out. And that's what this um, 34 strike gush call would basically target. So, other than that, not too much to go over. There's a bunch of other trades that I will be talking about, but those will be on the stream. So, I look forward to seeing you all there. But other than that, I think I covered everything I wanted to cover today. There really isn't that much going on this week. Again, other than Thursday and Friday, we have the PCE data and the GDP data on Thursday, and then Friday is the Michigan consumer data. Wednesday evening, we have Micron earnings, which will carry over for Thursday and Friday. So it should be a good week. Um, and one little thing I did want to recap on is that from the start of the challenge last week, we were at 5,000. Now we are currently at this almost 6,100. So it was a very good first week, and we're going to see if we can take this to 7,000 or 8,000 this week. So that's, again, that's that 5,000 starting challenge. Ideally, we're going to try to take it to about 100,000 by the end of the year. So I look forward to seeing you all on the stream. The streams, again, they start at 9:15 a.m. Monday, Tuesday, Thursday, and Friday. So I look forward to seeing everybody there. Other than that, I hope everyone has a great week. Thank you for watching, and I'll talk to you in the next one.